the spending decisions taken in last Wednesday's budget will mean that the government will need to borrow more. They're going to need to borrow more by around, on average, 1% of GDP in each of the next 5 years. That means general government debt as a share of GDP will now slowly rise. Now, at Moody's, we take a long-term view when we assess credit ratings, and the budget has not materially changed that long-term view. As you said, it's going to make an already difficult fiscal picture, in our view, more challenging. The government is going to have a limited buffer now to be able to absorb shocks in the future and still be able to meet those fiscal rules.
Right.
And we already expected prior to this budget that for most large European economies, it would be difficult to reduce debt given acute spending pressures.
So therefore, my question is really whether this budget actually calls for a downward revision in your outlook for the UK economy. At this stage, you still rate it as stable. Is this the moment to actually move it to negative?
So we don't comment on future rating actions. We have a stable outlook on the AA3 rating, and that really reflects the fact that we see a balance of risks at this point in time. So that means that there's an equal likelihood of an up or a downward movement in the rating over the next 12 to 18 months. We outline in our research what could change the rating down, and we could see downward rating pressure if we expect the strength of the UK's institutions were to weaken materially, reducing the UK's ability to cope with economic or fiscal shocks, or if we expect the amount or affordability of government debt to weaken sustainably relative to peers. But as I say, there's a stable outlook on the AA3 rating. It's at a relatively high level. It's about 3 notches below the highest possible rating. And that view hasn't changed based on the budget.
What I would like to understand here is whether you disagree with Mario Draghi. He wrote over the weekend for the Financial Times saying that actually Eurozone economies should look at the UK budget and take lessons from it. Do you disagree with that?
Well, the UK budget clearly tries to boost growth potential through higher public investment. And if that investment is sustained at a high level and is spent well, it is possible it can, over the very long term, increase growth somewhat. Now, we know that governments directing and choosing investment opportunities is a risky strategy. It may not result in the best value. And so the UK government has actually introduced a number of guardrails which should hopefully help to improve the effectiveness of that investment spending. Now, in our view, for the UK specifically, the extent to which that new investment could raise potential growth will be limited unless the structural economic constraints that have kept UK growth relatively muted are sustainably addressed. And we think those deep-seated economic hurdles will be difficult to address. So the budget really doesn't change our view of longer-term growth in the UK.
But
we estimate potential about 1.5%.